Hold on. Do I get any Advil around here? I gotta. Oh, here we go with the aspirin. Whatever this is. This will do. This will do. Ah. What's up, Bonnie? Okay. Lower this. All right. All right. There were a couple things I wanted to. I was going to do it in the morning, but why rush? Can't have a conversation. I figured might as well do it after the close here. A couple of interesting things. A few of them from McElliott's last update last night. Let me just get them organized here. Okay, this and this. All right, I could go through that, I guess, as we're chatting. Yeah, well, actually, today was pretty dull up until we saw some action for me anyway. Coming to Marvel, I've been trying to stick with, especially as the market has gotten better and thinned out at the same time. As the flow's gotten better, sticking with the more aggressive activity on an intraday basis and not trying to just play to play, off a sweep because I got a hunch something may bounce and shit like that. So generally, for a lot of you to understand where my head's at with trading the equity and how I approach intraday trading, I'm not looking to rely on any particular bet being right. That's that frame of mind I use more towards for the stuff I swing or look to build positions in. Right, I'm looking for whoever may be accumulating a position to know something I may not know about that underlying or that company. When it comes to trading intraday for me, when I'm at my best, I'm trading solely to benefit off the activity that's coming in at that particular time. Right. So if I can have my way in a disciplined manner, I would try to stick to solely the more aggressive activity. And the definition of aggressive is kind of vague, right? Everybody could have their own definition per se, but you can sense from that sweeper that they're coming after it, right? They're interested in the name, not just, again, one Tesla sweep of decent size, or could not downplaying Tesla. Tesla's a more active name that means nothing in the Tesla. All right. So, an example today, there was really nothing. There was really nothing I could even try to get my hands on because a lot of the action was smaller, cheaper, and isolated in a sense. And then Marvel caught a band of what looked initially like algo type sweeper activity in weeklies that expire tomorrow. And, a lot of times when you see that type of action, because only a day left in the week, obviously there's something at play. There's some news, a stock will halt or a stock will move too much to where you don't want to chase it. We kind of were fortunate enough today where Marvel, that wasn't the case. It caught that band of action and didn't really start to move until that second round of buying came in. And then a lot of us didn't even find out what the catalyst was until we were out of the stock. But this is what it looked like on an intraday basis on a 1 minute chart. All right. And this is my cup of tea, especially, for intraday purposes. Stocks doing nothing. There's no flow in it at all throughout the day. And then all of a sudden, if I can put volume on here, I don't have volume on here. No. But if you would, hold on, I can do it like this, I think. No, 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 I think I got to do it like this. No, hold on. Where the fuck is volume? You gotta be kidding me. It can't be this difficult. Oh, there, that's volume. All right. So I mean, it stands out like you can't miss it. All right. See how that increased, and actually, you can see it started to pick up a little bit as those sweeps came in, and then volume swells. All right. And then after that, there's a lot of different factors at play. A lot of luck comes into play. You guys remember I shared the story. I swear to God, I thought it was going to happen to me again a couple weeks ago, where I got into a name and it literally did exactly this, and I just sold it because it ripped so much so quick that I was excited just to take the money off the table. Then it halted, caught news, and then when it opened up, went up even that much more. So this there was no catalyst we knew of. We thought maybe chatter was at play, and this thing just trended higher. We sold into the strength, and it was the CEO, I guess, speaking positively about the business at some fireside chat, JP Morgan. So again, moral of the story is this was it for me today. The action's been better. I've been a lot more active, even trying to stay disciplined. Yesterday, I played a couple names. One of them was pretty good. That one had a good day today, though. This TCOM. Oh. All right. So this thing had a real nice day today. Follow through. I didn't play it today. Played it yesterday off action. So again, the action has been better, even with the market kind of digesting here. And I think what we're seeing right now, we're not seeing really any particular side get aggressive the last few days. Both puts and calls, both sides have been cheaper activity, cheaper premium, a lot more short dated stuff. And we'll see that especially when a market comes off a strong move like we have. And a lot of times it's a sign of just we need more digestion, right? There's a lot of stuff out there that still needs to digest. Now, the good thing is if the action continues to remain active in names, that doesn't really bother us in any way, right? Again, a TCOM, if they come after a TCOM on any particular day, who cares really if the market's strong or any momentum in the overall market on that day, right? We're playing just the TCOM. So the good thing is if they continue to find interest in some of these other areas, you could get through the digestive period. But if not, that's, again, where you sit on your hands. And you guys have seen times where I sit on my hands for 2 weeks with not much to do. Okay. But overall, before we get into some of the more interesting stuff, if you remember, I don't remember the last time we spoke with the holidays and everything. What the hell is all this? But we were discussing how, the market, the rally has been extremely strong, and we don't need to see anything of any significant magnitude on the bearish side, but we needed some sort of digestion, right, in the indexes. Hold on, let me get this off here. Okay. And the question, and this is what I was talking about a little in the steam room, and I wanted to leave it for the webinar today, because this is a problem I face, especially with swing trades. Okay. I'll give you an example. CF, right? Caught some really nice action somewhere around here, I think, if I'm not mistaken, somewhere in this vicinity. Okay. And off the flow, right? Off the buying itself, it definitely was swingable activity. It was quality activity. They were buying calls with time, so they weren't just looking to play off the momentum over the short term. It looked kind of like activist flow, right? Like an activist getting involved, that sort of thing. And the reason I'm not in a swing trade currently is because exactly of what we've been seeing here. You had positioning go from underexposure to now everybody's pretty much fully exposed here, right? You got systematic funds, they're full. Hedge funds have dipped their beak on the long side. Retail has gotten involved. So you come from pre-rally, nobody had any exposure on, to now people are pretty bullish. Okay. And we're at a point where the action starts to thin out. You're going to run into overall, at the least, consolidation, if not some sort of pullback, even if it's not major. Okay. So anything we were looking to swing from that point, meaning the last week or two, let's say, right? You have to weigh against the risk of getting caught in some consolidation of pullback. Okay. So here's exactly the difficult part in trying to figure that out, and where you weigh the risk reward, and not always does it play out the way you're hoping it will, but at least you're acknowledging it. Do you tail quality action and hope it doesn't have as much of effect on that name, right? Because you have a breather in the overall market. A lot of names are significantly overextended, especially on the tech side, right? The Magnificent Seven, we've been talking about that for more than 2 weeks now, how they were really crowded and the risk reward there was sour, right? Do you go and you build a position in the CF while the market does something like this? All right, so that's kind of the pickle for me in whether I should just continue to do what I'm doing, trade intraday, which, again, if the market conditions are okay, it's going to be good to me, right? Or do I try to stick my neck out, put on some overnight exposure with a higher probability of the overall current of the market turning bearish? All right. So that's kind of the predicament. And now you can see, right? The answer to the question was that there have been stuff out there that have bucked the trend. While the market has come in as we were expecting, look at some of these banks. All right. They've continued higher. So if you stayed away, I thought I erased all this shit. If you stayed away from the crowded areas of the market, we could have got away with, holding overnight risk with swing positions. Okay. There also, as we mentioned, I think the best part of the setup, even expecting some sort of digestive phase, was puts were dirt cheap. So if you didn't want to even unload some of these overextended names, right? You still wanted to hold on to whatever you had, but you felt you were too heavy, you could very easily put on some puts that were cheap to protect or soften the blow, just in case that digestive phase becomes a little more violent to the downside than you expected. So, but that's kind of the predicament where we left off. We were in regards to the overall market and putting on any new overnight risk prior to this. We didn't know this was going to show up right here, right? Could have showed up a week later, but eventually something like this, right? There was a higher probability of something like this coming sooner than later, just based off not only the price action being overbought, but more on the positioning sentiment side of things. All right. Survey sentiment, you went from bearish extreme, now you're at bullish extreme. A lot of things went from one end to the other. Okay. So now where are we at? I think, the main question everybody is asking here is this the start of something worse than what we're seeing, right? Could the selling accelerate, the downside accelerate? Could it become more violent? Or can we get caught in some lengthy digestive period, right, where it's just chop and stuff like that? I think that's the general questions everybody's asking here. And I think it's extremely difficult to try to go out and forecast that. More difficult than ever in this type of environment with what we're dealing with. But a couple things I wanted to run by you, a couple of catalysts and a couple of things to keep an eye on. where I think we can help navigate even on a more tactical basis some of this stuff, right? So let's. I'm going to pull up a few things from McElliott. I think this is one of the more important things that's really interesting here. Okay, so to McElliott's point, and I kind of agree with him, we have Jan OPEX coming up here, right? And without any new shock that would show up in the market, and you have the capabilities of that, especially with all the geopolitical stuff going on all around us and shit like that. Okay. But without something that's really going to shock the market, you're likely going to see more of the same of what we've been seeing here into and through Jan OPEX. Okay. And so what's that mean? Meaning that VIX will likely remain suppressed in a sense, right? Any VIX strength will likely is more inclined to find sellers than buyers, okay, until Jan OPEX. So I think that's kind of the main takeaway from here to start off. And then once we get through the Jan OPEX, there are a few different things to keep an eye on that are really interesting, right? So here you have, and again, this is above my pay grade. As far as the details behind all this, we spoke about this numerous times. You remember we talked about why the market bottomed when it did, what turned the market when it did, right? And we spoke about Yellen and kind of that QE twist, they're now calling it, or whatever she did off that QRA. The next similar event coming up, you have Jan 31st, Feb 1st. Estimate date right there. Okay. And you can see McElliott here makes the point. This is where that QRA nailed the lows, right? So, in simple English, my understanding of it was Yellen announced a lot less of supply. If you remember, the liquidity in the bond market was kind of the main burden on just the whole environment at the time, including risk assets. And not only forget about Powell pivoting after that, Yellen was the first to pivot. And that was right here. And no coincidence, you could see the market stopped selling on a dime and turned, right? And then after you had the Powell pivot, okay? So here, according to McElliott, in his words, the next quarterly refunding announcement from Treasury, Jan 31st, Feb 1st, that's an estimate, right? Official granular announcement should in fact see a thematic reversal of some of that prior Treasury twist surprise, which kicked in the after. So in other words, in simple English, we need to see, this is what a potential catalyst to possibly either kick things further in reverse, see some additional selling, which McElliott touches on here. There's a chance of happening if Yellen kind of undoes what she did this last go around, right? Or again, the opposite, where she goes easy and the market takes it as, almost like a stimulant in a sense, just like we've seen, right? So the moral of the story here is the end of January. So once we get through Jan OPEX, the end of January, you have potentially a pretty big catalyst to get things to loosen up here. Okay. And when we say loosen up, like the market has come in some here, right? Again, if you're buying the highs and you got caught, especially in short-term options, it feels like a crash. But in reality, right, coming off the move we just had, this is a healthy, normal, orderly pullback. Right? This is an aggressive move. So bullish or bearish, something like this is going to show up regardless at some point. And we got this now. Now, for this to turn into something worse, what you're likely to see is a bid come into VIX, right? The credit conditions of the bond market start to worsen and stuff like that. Financial conditions aggressively tighten. So that's what we're referring to when we state that we're looking for this to turn into something potentially different. Otherwise, ultimately, this becomes just a buying opportunity, especially in many sectors and names. All right. So that's the first thing I wanted to throw at you guys that I thought you'd find interesting. The end of January, something to keep an eye on. All right. Another thing that McElliott had mentioned that he's really good at, and this was something as well um, into several market lows. He follows the VVIX, right? A lot of you know the VVIX. Okay, and Happy New Year, Stace. It's not an easy thing, right? To forecast or try to predict when VIX, right? When volatility will see that bid, right? We see VIX a lot of times up at the open and they just sell the living shit out of it every single day. All right, as you can see off a chart of VIX. Okay. Um, the thing to keep an eye on, according to McElliott, and a lot of you in the room, we've talked about this, you already do, is VVIX. So McElliott made the point that without VVIX, in other words, set an alert for at 100 for VVIX. Without VVIX trading above 100, okay, the likelihood of VIX seeing any real bid that turns things really sour in equities or risk assets is a lot lower. Okay. So instead of worrying about a little bit of selling that we may have on our hands currently, right, with VVIX still pretty tame and not showing any life, once this thing starts to trade up near or above 100, that's when you want to take a closer look to see maybe things can snowball into something more dicey. All right, so I found it pretty interesting. He actually gave a level there, 100 on the VVIX. Again, we look at this every day. A lot of us in the room just to keep an eye on it, because any selling you do see without VVIX showing some life usually doesn't mount to much, right? And those are the pullbacks you definitely want to take advantage of. And the last and the final thing on that note that I wanted to show you, what the hell did I do with it? Hold on. Here it is. In his opinion, he feels that even though positioning and sentiment has turned bullish, he believes right now, with the information in front of us, that things probably need to get a little bit more bullish before you have that offsides positioning, right? Because that's all these large, violent, aggressive moves. They all stem from offsides positioning, right? The few that don't are, again, that exogenous event that nobody expects, and there's no way to predict that shit anyway, right? You can't play this game expecting that. You'll go broke, right? You got to be aware of that. You always got to pay attention to the risk of that. But when it comes to positioning being offsides, a lot of this stuff you can see ahead of time before it materializes. And according to McElliott right now, even though things are bullish on the sentiment front and positioning is more full, obviously, than it was earlier in this rally, he thinks you still have some work to do. And one of the things that he pointed out to keep an eye on, simple thing, is just skew, right? So SPX, the option skew on SPX, was really, really low. And what you're likely to see, and you can see we've been trying here to push to the upside, before you get enough of that positioning crowd caught where they need to puke it up into downside, the likelihood is you're going to see this a lot higher than where it is right now. All right, so something else to keep an eye on. So what we could definitely see happen, right, and it would make a ton of sense, is you get a little bit of a breather here, right? We find a low at some point, and maybe we make another run at highs potentially, or maybe just even chop around while people think and will feel that we're going to make a run at highs to get them more bullish before that leads to any sell-off we want to step out of the way of. Okay, so that's kind of where a couple interesting things to keep an eye on for now. In the meantime, um, while we're waiting for more information. I think that's the most difficult part. We've been talking about this a lot, right? The most difficult part about this market is trying to look too far ahead, right? And I'm not even trying to say crystal ball, whip your crystal ball out and try to predict and forecast. I'm just talking about swing trades in general, okay? There are so many different dynamics and factors at play, okay? More than not that for you to build a basket or a certain bias on the long side, forget about the short side, you'll get destroyed. But on the long side, so many different things can change over the course of days in where you could be caught in something that's just not participating, right? Or, not the place to be at that current time. What do I mean by that? I'll give you an example. We're at a point where we had everything rally, right? That's the beauty when you come off a correction and everybody gets caught offside on the bearish side and it flips, right? Eventually it becomes an everything rally. First, you get the Magnificent Seven, they rip, everybody crowds into them, right? Then they top out, then it goes to the underbelly, then it moves to the cyclicals, then it goes to the small caps, right? Kind of what we were talking about for the last 4 weeks, right? So you're looking for, where are they going to rotate next type of thing, okay? That's the beauty of what comes after a correction or a pullback when you get positioning caught off sides and they need to slap that exposure back on, okay? With these more shallow pullbacks, it becomes a lot more difficult because a lot of times the rallies that follow off these shallow pullbacks are not everything rallies, all right? So you may be looking to buy those Magnificent Seven names, right? Like an Apple or a Tesla or whatever, thinking you're getting a decent pullback on them, and they could significantly underperform any rally over the next couple of weeks when we do bounce, right? And I think the catalyst behind what leads in these rallies that we're talking about has a lot to do with other things that are at play, okay? Again, I'm trying to put it in words so it makes sense so you know what the hell I'm talking about. I'll give you an example. We looked at this chart this morning, okay? This is the City Economic Surprise Index, right? And you can see what's been going on here of recent, right? If growth disappoints to the downside, in all likelihood, okay, you're not going to get the bullish bias that we've been seeing in a lot of the cyclical spots of the market, the more economically sensitive spots of the market, right? Because people are worried about the economy slowing, having an impact on earnings and shit like that. So if the economy does show signs of slowing, right? We get a crack in the job number tomorrow, or the PMI, the ISM continue to slow down, we're likely to see money come out of these cyclicals that have rallied and go into more defensive areas. That's what we've been seeing recently, right? Think of Merck, ABBV, that's been rocking and rolling, right? Eli Lilly, okay? Or it could even go into these Magnificent Seven names as a defensive trade, okay? But that likely all hinders on how this stuff shakes out. And the God honest truth, in a normal market conditions, normal environment, you can get a handle on how things may look for the next quarter or two. Okay? No, I don't think anybody has a clue of how this shakes out. Right? You still hear a lot of people talking about these the lag effects on what the Fed has done. Most aggressive tightening cycle ever, right? We're likely going to see the impact on the economy and it start to slow. If that's the case, right, you probably don't want to be involved in these economically sensitive names. Okay. But in the same breath, I can find just as many players in this game that think the complete opposite, that the economy has seen the worst. Goldman, for example, feels that, right? The economy has seen the worst of it's over. And the economy is going to show resilience, right? And even though it may not be exceptional growth, we'll have, a slower growth with a more friendlier Fed. Okay. With that playbook, you want to gobble up the cyclicals, right? You want to gobble up the small caps. Okay. So you see what I'm getting at here. Like, any of these, all of these scenarios could be wrong. Nobody knows. And that's the most difficult thing right now, I think, in trying to look out and build the game plan behind a basket of swings. Okay. And if you think I'm overthinking it, right, and I'm just looking too much into this whole rotation thing, if you pick the wrong basket, you're going to be wrongly mistaken, and it's going to cost you money. And we've seen it time and time again, right? Very easily, you could see tech coming off of the rally it just did, especially the larger names, underperform, chop around at the least, and stuff like the banks continue to outperform, or REITs continue to outperform, or big pharma continue to outperform. Okay. And if you're holding tech, or you're holding especially some of these more growthier names that are out of favor, you're going to lose money. Right. And you're seeing that right now, right? Everybody thought because of how bullish things were, you could just buy the dip on Apple and it'll come right back. Right. And it's continued to sell off. Or a name like PLTR that everybody and their mother was bullish on. Right? Just keep buying it. And you go to new highs and they're stuck in it. And in options, you're losing money. So that's what makes things so extremely difficult here, especially if you're looking to build positions. Right? Especially if you're looking to build positions. Now, for me, okay, what would simplify all of this? Okay, and what does simplify all of this for me is I try to stick with where the quality sweeper activity is going, right? And plain and simple, if there's a decent setup there, that's what I want to worry about. You understand? And that allows me to, instead of trying to overthink things or try to guess wrong and be early, to at least be a part of what's in play. Okay. And again, going back to the bull market, bear market, liquidity rally, this rally, right, or this bullish phase has had so many different labels on it, right? I mean, for me, this was as cut clean and dry of a liquidity rally as you're ever going to get, right? You had a burst of liquidity in the market, and everything caught fire, right? Wasn't any new leaders, anything like that. It was everything. You name it, from crypto to the mega caps, didn't matter. Okay, so without those bull market characteristics, where we start to see those new names being bought, and that's going to kind of happen under the radar, behind the scenes, without us even knowing it until it hits us in the face. Until we see that, I think we gotta continue to be on the same playbook we've been on, and that's not, in other words, simple things, not getting too far out of our shoes here and approaching this market the way we've been approaching it since the October lows, no matter, even if things look a bit more bullish now. And I see a couple comments, and what you guys are 100% right. Like energy, right? Energy was a leader, and energy was the place to be, or commodities in general. Rates are higher for longer, blah, blah, blah. The Ukraine war is still going on. Commodities will remain bid. If If that's where you're building a basket of names in, you got buried, right? You're buried. I mean, these stocks, especially options, these stocks have done nothing. These energy stocks for how long now, right? And now the problem is that tech has been the leader, right? Especially mega cap tech, and that's where all the eyeballs are, as we've been discussing. And if something like what's happened to commodities or the banks or any of the other groups, the industrials, happens to tech, you're going to see people get lit on fire, right? What do you think retail's been buying? Right? You think they're buying cyclicals? Right? They're buying all big tech mostly. So that's the risk that's out there. That's the risk that's out there. But my recommendation, again, everybody has different scales of risk they want to take, right? So, I mean, the way I approach it, and you got to understand, I'm an old man in this game, right? I'm not the cowboy I used to be. I'm not taking the risk I used to take. For me, when and it sounds ridiculous, but when I'm most conservative, okay, when I'm most unsure, right? My signals aren't screaming at me anything in particular. My time frame comes in, right? So when I'm most conservative, I'm day trading, right? Because that's where I can manage my risk most efficiently, right? Obviously, if you're not holding overnight, you're not taking as much risk. And I don't have to occupy myself with what sector's hot today, what stock is hot today, right? I don't need to really focus on that because I'm going where the puck is going on any particular day in regards to the flow. Right? Today, the puck wasn't going anywhere. It went to Marvel. That's where I went. It wasn't, the semis in play. The semis are out of favor, right? So when I'm most unsure and most uncomfortable about things, right, according to the signals I'm paying attention to, that's the most conservative approach that I take, right? And then as I want to get more aggressive in my approach, that's when I start taking more time on positions, right? That's when they become swings, maybe over the shorter term. I want to get more aggressive. I start adding multiple swings over an intermediate term time frame. All right. So depending on how much risk you're looking to take, and nobody can tell you that but you, right? That's kind of how you want to approach where we're at right now, and weigh your risk here. Right? If you are on the same page I am, where until we see the flow that points us in the right direction, telling us, okay, they're bombing small caps in this particular group, that's where we want to get aggressive, right? Until we see things like that, maybe you don't want to swing more than one position at a time, right? Or maybe then that number is two positions. But these are things you have to think about. These things you have to think about these things because you get caught in a pullback, even just like the one we did right now, and you're going to spin your wheels continuously. Yeah, and Mark, exactly. It's hysterical because we heard it over and over again, right? And we talked about this. Higher for longer, higher for longer. The Fed's never going to do that. Powell can't do that. They're going to wait till inflation's dead. The complete opposite happened. Right? And now, right, you get everybody towards the complete other side. Soft landing. The worst is over. And who knows what can show up, right? Who knows? And the problem is, I think there are other scenarios that we're not even aware of that are likely to show up. There are other things that nobody's talking about that are going to throw a monkey wrench into everybody's plans. And the only way you can adjust to that really is if you can keep an open mind without much of a bias and be nimble enough, right? See, in a full-fledged, in a bull market, right, that you feel, I don't want to use the term feel good about, because the true bull markets, you really truly don't feel good about. But you're seeing the things you want to see, right? You get sloppy, but you're being forced to get sloppy from, again, whatever signals you may be seeing, right? Maybe it's the price action and the flow, technicals and the flow. There are things, even though you're not feeling bullish, that are forcing you to remain bullish. All right. Like that's a true bull market where you don't feel great about things, but the stuff you're seeing feels really good. Right? And like I said, you may not be looking to take much risk, right? But you start seeing them light up, oh, underbelly names in software for whatever reason, right? And you're starting to see new software names set up. Okay, even though you're not bullish, the signals are telling you to stay bullish here. Right? So until, without me seeing that, right, and getting into the forecasting game, that's where I can get myself in trouble. Not even trouble. I'm lost in it. It's too difficult of a trade. It's too difficult of a trade for me. Like I feel like I have zero edge whatsoever in those type of trades. All right. So that's the difference. Like without the flow showing me where I need to be, I'm lost. I'm completely lost in space. Otherwise, I feel like I'm doing what everybody else and including myself, would do without the flow. And that's trying to figure out if, Tesla is going to bounce here or not. And you know what I mean? I don't have too much confidence in that. So that's where we're at as a whole, right? And this is, let me tell you this. This is what makes it even more difficult when you're playing two sides and you're new to the game. Okay. If you're trying to swing both sides of this market, in this market, you'll be talking to yourself before you know it. You'll drive yourself insane. You will drive yourself insane because you can be right on whatever you were thinking. And look what just happened here. All right. The Fed pivoted, Yellen pivoted for no reason whatsoever. You could have handicapped it perfect, no reason whatsoever, and you would have got demolished on the short side. Absolutely demolished. So to be nimble and to stay open-minded, you got to try to stick to the long side. And when things get too bullish, right? Everybody's bullish and price action gets overextended, you put the guns back in the holster and you try to wait it out. So again, well, we're looking at names, right? We talked about like the CF, one of those names, right? Again, the TCOM from yesterday. Right? Like these are names a lot of you out there are probably saying, well, what the hell am I going to do with that? But that's what I'm saying. Like if the environment improves enough to the point where they're lighting up other names similar to this, but maybe they're in a sector you'd rather be in, that would make me feel really, really bullish, no matter how bearish the backdrop is. But right now I'm showing you a China travel name, okay, and an ag stock, right? And the truth of the matter is, it's not that they're really coming after the ag complex as a whole. This particular name caught the standout action, and that's it, right? That's why a lot of us think it might be activist related and stuff like that. So it's more of a stock pickers type market, right? But just really, really selective, really slim. Otherwise, you could guess where these things. I mean, you could trade these things, but you know what a lot of people are doing? They're not trading them. They don't want to trade them. They want to buy an AMD, right? Whenever they do buy it and hold it, and eventually they're going to hold it too long, right, off one of their buys and lose their money. The more action we see, the more fresh action we see in new setups, the healthier it's telling us the environment is, right? When they continue to find more and more new setups, sweepers I'm referring to, it tells us how healthy, how strong the risk appetite out there may be. And even though that may not have anything to do with a name like AMD that already hatched and has been bought up, these names tend to remain strong in that type of environment. Where caution flags go up is when the action starts to thin out and all you see is more speculative activity in names like an AMD. Right? They're playing weeklies or they're playing monthlies or whatever that may be. So, yeah, and like Praveen's mentioning a name, right? We got like a couple names. And again, I think this goes more towards the lack of buying in new names that we even are talking about some of these names. But like this is an interesting name that caused some action today, right? But dollar, like money wise, peanuts went into this, right? What we like is, we have cheap stock, right? Nobody in it, nobody aware of it. I think they're profitable. Like it meets all the characteristics we would look for in new leaders. The problem is, I think a total of 80 grand came into the stock. So it's peanuts. But if you like it, right, and you're not trading it solely just off the action, I mean, you use it as almost an idea generator, right? And again, I'm not knocking it, Praveen. I agree with you. This is something, again, you saw me mention it a few times today. But the action was really, really cheap. It was really cheap action. What else? What other names? Anything? Again, I don't want to talk about the old names. We talked about them ad nauseum already. Anything more recent that you guys have seen flow in that looks somewhat interesting? Right, like the Citigroup. We already know the story here, right? Like this is come and gone. And listen, that's where the money could have been made, right? If we really wanted to get a little aggressive. The setup in the financials or even the small caps for a trade were decent. So now we're kind of looking for what comes next here. Yeah, CF again. CF is the only thing we keep talking about that's had impressive action. Is there anything else? Yeah, energy again. You're talking to the wrong guy about energy. I missed pretty much the whole bull market in the energy stocks because I just never comfortable in them. And I'm certainly not. I can't buy them when energy looks like this. Here's the problem I have with energy. Okay, can they outperform the price of crude? Sure. There have been times throughout history where crude doesn't really do anything. Maybe it's range bound, but energy stocks are in an uptrend. I've seen that. Okay. Doesn't happen often, but I've seen that. More than not, your destiny solely lies with what crude does. Okay. So now think of it. You're looking at energy names and you're looking at flow and individual energy names when the bulk of what you're relying on, whether you make money or not, is all to what crude does. Okay? And if you think the market is tough right now to handicap, crude might be the toughest thing on the board to handicap. Why? Well, you got an economy, right? We just spoke about, if the economy remain resilient? Does it weaken? Does it do this? Okay, you have an economy that starts to weaken, demand for crude starts to weaken, right? Recession, bad for crude. That's not a good scenario, right? But on the flip side, in the Middle East, you got the Houthis firing missiles all over the yard, right? That, God forbid, can stir up some sort of holy war or some shit, okay? That would be bullish to crude, okay? It's impossible to handicap. Impossible. And I think this is why you have crude that looks like this. If you told me we would have Israel bombing the living shit out of Palestine and everything that's going on in the Middle East, and the crude chart would look like this, right? But I think the reason why is you got that tug of war, right? You got that tug of war. You got inflation that's been coming down hard. You have the threat of an economy slowing, global economy slowing, but you got that Middle East premium tugging on the other side. Right? And this is what crude looks like. So, point being, these crude names, they're tough, man. I mean, you're almost better off making a plate on crude. No? I think that honestly, that's how I feel. But if you want to know about the action, here's one of the better names, underbelly name action wise, CVE. Last few days has caught some action. But if crude, my opinion, if crude doesn't catch a bid, I don't know if this is going anywhere too far. That's the problem with crude. Kind of like gold or any other commodity, right? Uranium, any of that shit. So let's for now let's put gold, crude aside, right? Because again, even when it was bullish, it was bullish. Let's talk outside of crude. What's been catching some flow and what's look good? These names have exploded. You guys know I've talked about this name a lot on this webinar. This is one of my favorite, the ABBV. Okay, and it's had a nice run though that. So you kind of want to look for a breather here, I think. All right, but you have the potential for a major breakout again here. And ABBV is a stud, an absolute stud. The better trade, as we were saying, is if you see some decent flow coming into these pullbacks, that's where you buy it and you try to roll to catch the larger move. Easier said than done. But this has been in play. Merck hit the top bet list a couple times down here, Merck, with some buying with some time. That egg has hatched. But again, now look at it. Right? That's kind of the problem here. All the things we wanted to see flow potentially go into, they've gone there and these eggs have hatched. Right? But again, possibly another major breakout here if the consolidation, maybe if it starts to digest some of these gains here, you take a look. This is another beast, Amgen. Right? Yeah, this is the guy exactly, Ani. This is the rotation we've been talking about, right? These names went from being the hot money to some decent consolidation. It lasted a while, this consolidation in these names, and now they're hatching again. But this is where the momentum has been. Look at these moves. Okay, look at these moves. A lot of you have been now. These are obviously more risky, so make sure you're putting into the calls what you're willing to lose. Blah 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 blah. But biotechs, right? We've been talking about the flow in some of these biotechs, but even there, you can't. In my opinion, you can't buy these things up here now. Like look at this CYTK. This pat yourself on the back, roll, congratulate yourself, but what are you going to do? You're going to start building new swing positions up here? I can't. All right, this is kind of like what we were talking about in these tech names. All these things. I mean, some of them I guess are still going. I don't know. I stopped looking at a lot of these things because they just extended. You guys were rolling in this one, right? Oh, you got a little pullback here. BBIO. The same thing. This is a nice move. That's a nice move. So now you're getting a little bit of pullback here. See if some flow comes in again. But don't forget, BBIO, where do we see action? Here, right? Then here. Now, let's see what goes on here. But it's been a great trade. So there are a lot of small biotechs. Again, I think that train has come and gone too. What else? Healthcare, biotechs. Anything else you guys got? Banks we talked about. Shippers, good call. Good call. That was a nice trade. Very nice. That was a nice one. Now that you had the news too, with the out in the Middle East, the Red Sea, right? But look at this, STNG, Zim. Yep, that's China too. Zim. All these things, right? What there's a couple of the other ones I forget the symbol. This caught some leap action today. SB, all these shippers, all these shippers. So let me see. What else? What other names? I count on you guys on this. APP. Let's see, Khalid. This is tech, right? Yeah, you're in consolidation here. You're in consolidation. This name has seen some action in the past. This one and this one, VRT. This one, oh yeah. So you got a little breather there too. I get. Do you like it for a trade, Khalid? Just out of curiosity, you like it that you're buying bottom of the range and you're going to look to get out type of thing? Is that what you're looking at? A trade? But I definitely could see that. It's funny. You guys are mentioning some of these tech names. That's probably where we're closer to a bounce setup than all the others. But these are the things that are out of favor. They're selling, wait, 45, 35 puts, you mean? They're not selling 45 puts, can they? They can't be selling 45 puts. That might be tied to something if they're selling 45 puts, Seesaw. Oh, what a beast this thing is. Like, this AMR is up 100 points from that sweeper activity in November. All kidding aside. More than that. Look at this. Incredible. I don't know if you buy, where you buy this again up here. I don't know. Here you had, I remember I got deja vu. Here we were saying you have at least a little bit of a breather here, right? You had this big rip and some nice consolidation. Now this is just vertical. I don't know what the hell you do with it here. But yeah, this thing's a machine. And their numbers are ridiculous. I think they do like coal or some shit. Look at their numbers. Look at their numbers. Stacy's talking Snap. I think, Stace, I think these things get stuck a bit. I could be wrong, but I think they get stuck here a bit. And the reason I say that is because of this. Right? So what I think even the bullish case, what you're going to see is you're going to probably see choppiness. And that would be bullish, I think. That would be bullish as opposed to, and that's certainly a possibility. But this is the dilemma I think we face with a lot of these lack of quality growth names. You know what you need? You know what you would need, in my opinion, for this to continue? You would need the Fed and Yellen to continue to do what they've been doing. Okay? And if that's the case, then you're going to see everything go bananas. You're going to see this thing go to hell in a handbasket, the dollar. And you're going to probably, the country will be up in arms over it because it's going to appear like they're trying to rig an election. You already, you already have people starting to talk about it that would never talk about it. Usually it'd be just like conspiracy theorists like us talking about it. Now you got Tucker Carlson. He has got Gunlock on the show. These, Tucker Carlson's not a financial guy. Like, he's talking about it. So for the Fed to almost implement a QE liquidity type shit here, I don't see how that's possible, but I could be damn wrong. But again, forget about what I think. If we see that, then you can buy all those names, Stace. You can buy all those names, right? Okay, so if you start to see this, and we'll see it again for Steamroom members, you'll see it everywhere. We're first going to see it in credit default swaps. We'll see it in financial conditions. You'll see it everywhere, like we just did over the last couple of months. Okay, but this blue line would have to continue here like this. Okay, and you'll get all those names. The snap, the more speculative underbelly growth continue to higher from here without digestion. You'll get Bitcoin go bananas to the upside. You'll get all that speculative stuff. See, what I think, I could be wrong, but what I think we start to see again show up is more stock picking of quality out there. I'm not talking about quality megacap tech. I'm talking about profitable companies that are growing. They're not just going to buy UPST or the weed stocks or AMC and GameStop like we were seeing. We're gonna start to see real stock picking for real growth. So that's why I think like Snap could run it outside some news that they get bought out or some shit like that. I think they could get stuck here. That goes for a lot of the underbelly stuff, underbelly growth, more speculative growth, we should say. And I think we get a rotation the other way. I think we rotate away from growth more to value because of how much we've rallied on the growth side. Okay, where I think I would be wrong there is if the Fed steps on the liquidity gas pedal. PayPal, yeah, that's a disaster. That's a disaster. This one's been better, but same thing. I think it runs into trouble here. Let me get this thing off now. Hold on. I see. Look at these charts, guys. Look at these charts. Okay, you look at this, and you look at, oh my God, look at the moving square. But look, this is the real square, right? And you see these dots? That's just running too much, too quick, overextended, and it looks like hardly a bounce, big picture wise. For this to do this, you need QE. You need QE. Yeah, exactly, Wildese, exactly. QS, that's another one. Like, that was unbelievable squeeze. Don't get me wrong. We kind of aggravated that I ignored all the action in it this morning. because it gapped up. I wasn't chasing this piece of shit. But I wouldn't buy QS if you gave me the money and tell me, Jay, this is yours, lose it. Don't worry about it. You don't have to pay me back. But you have to buy QS. I still wouldn't buy it. How's that sound? I still wouldn't buy it. Yeah, this is the crap of the crap. This is what I mean. That's how you know it was a liquidity driven rally. This participated. This performed. Okay? This is not leading a new bull market. They're bleeding out money. Look at it. Revenue, zero. Zero. You do more in revenue than QS does. Okay? What happened today? They, I think, showcased their battery to Volkswagen or some shit, and shorts got caught. That's what happened today. And it happened here. It happened here. It happened here. It happened here. Look here. It happened here. Look where it ended up. Okay. The only way things like this perform well over an intermediate term time horizon is if the Fed is if they're printing money. Plain and simple. This is all story, sexy story. Okay? When the Fed injects liquidity like they have in the past into the system, there is so much money out there that people want to speculate in the sexy story. They want to take shots. They got amples amount of cash. They don't have enough places to park money. So they buy sexy stories. Okay? When the Fed's not injecting liquidity into the system, sexy stories not getting you anywhere. People want to see numbers. Right? They want to see earnings and growth. Okay, so what you've been seeing in like these magnificent 7 names and why people have crowded into these names, because that's where you can get growth. You can't get growth anywhere else. It's been so difficult because the economy with the Fed doing what they did, So the only way you're going to find growth is in these large cap and mega cap names. So all the money that's been on the sidelines, and a lot of it, right? A lot of money went to cash in the bear market. They all have crowded into these mega cap names, right? Now you got a few exceptions, like we've been talking about, right? That names that weren't crowded, that are earning money and growing, and look at their stocks, right? Like an Annette, okay? Like an SNPS, right? Like an SMCI. Okay? They all look completely different than a QS. Right? And it's no coincidence that when you pull up their numbers, you see real numbers there. You don't see zero revenue. All that other stuff is just a short squeeze. And don't get me wrong, you can make money in it if you're in and out, right? And you play it right. And you get a little lucky, but the way to lose money is believing that something more than just a squeeze is going on. And that's where people get destroyed. Yeah, those, you got to be careful with those. See, even trying to keep it simple. So like the old IBD, Investors Business Daily theme that, is not as popular anymore. But if you're into like stock picking and stuff, kind of you want to build positions and names, not just tactically trade them in and out. You want to give them a little longer leash. You want to try to stick with profitable companies. Right? People, because of what the Fed did, people forgot what the stock market is. You're buying shares of a company and you benefit as the company makes money and grows. Right? When the Fed rigged the game as they did for COVID, especially the retail crowd, no one paid attention to that. Right? You're looking for what's everybody talking about? What altcoin is everybody buying? But again, that's if the Fed doesn't come back and do what they used to doing. Right? We may see the Fed just come back and all it does is take one little incident, right? One little credit event, and then we'll see the true colors from the Fed. They probably go back to doing what they normally do, and you can buy any sexy store you like. But until then, it's going to be tough. It's going to be tough. Kava, I think I know them. Is that a restaurant play? I think a recent IPO. I think I had seen this stock, Kava. Let me see. Yeah. I remember looking at this Kava. Looks interesting. I don't know anything about it. I just again, this is more my cup of tea, right? Um, Fairly new company, not crowded. Again, I don't know anything about them. Looks like they're earning a little bit of money. But if there was ever sweeper accumulation in a name like this is what would pique my interest. We saw a little bit of action in the name. I think one of you guys mentioned this name to me in the past. Maybe not, but odd. This is more what would be kind of my cup of tea, right? Fairly new name, market not great, obviously. IPO kind of ignored, and kind of just been hanging around here, right? Nice correction, has retraced, and they're not huge profits, but they're on the profitable side already. You start seeing flow that could be tipping you off to these quarters looking even better in the future. All right, and this is a software name. That's how it starts. Or even here's a name you guys know well, ARM. All right, same setup. Okay, this is what I'm kicking myself because this is something like I would look to swing possibly, right? IPO, everybody knows about it. The market conditions aren't great, so nobody gets excited. Comes down, there's a whole bunch of nothing. And then all of a sudden you got sweepers. You see the circles up there already. Start to pick at it and do some buying here. All right? This is the ideal setup for me. Ideal. And this is a real name. So if you were to tell me you're looking to buy and tuck away dips of, in ARM, there, not that you care, but there you would have my blessing. A QS, I can't. Yeah, Ani, listen, again, everybody's different, Ani. That's why, I used to just get in the habit of preaching to everybody exactly what I do. But, the more I talk to people, the more I understand that not everybody plays this game the same, approaches the game the same way I do. Right. And, I think a lot of people don't understand that. They don't understand that. Right. I mean, the more common way to play the game out there is to stick with the bigger names, buy the names, the more active names like the Tesla and the Amazons and all. Not that I never want to do that, but for me, for the stuff that I have confidence in, there's no edge in that game for me. At all times. Only at certain spots. Only at certain spots. And those certain spots, they're limited to where you'd be bored out of your mind if you were just looking for just those spots. You understand? We talk about it every day, like Tesla. Okay, like Tesla yesterday caught probably $5 million worth of sweeps between weeklies this week and next week. Okay, and I get it. People are oohing and ahhing. Oh, Tesla! Did you see that $1 million? That's a spit in the effing bucket for Tesla. Tesla trades more than SPY does these days. Like Tesla could catch $5 million worth of weeklies right now, and then by the end of the day, catch 10 million bucks worth of weekly puts, and it wouldn't surprise me. That's how active Tesla is right now. Now, that wasn't always the case. As many of you who've been around me know, Tesla back in the day, and not that long ago, used to catch, if it caught $1 million sweep, you wouldn't even think you would tail the order. You wouldn't even think twice. You would buy it right then and there. Okay? But that's before Tesla did this. You know? Now everybody's playing this thing. Everybody every day is trying to figure out whether Tesla's going to go up and down, up or down. And this is the problem, right? What's people looking at? They're looking at technicals. Oh, Tesla breakout. Whoop. There you go, right? The signals are more prone to failure, the stuff that everyone's looking at, because there's so many eyeballs on it. There's so many eyeballs on it. Where if a name like this, okay, forget about $5 million, because it would never happen. But if a name like this caught a $300,000 sweep, I would be a hell of a lot more excited than those sweepers in Tesla. Make sense? You know? So again, like if you trade just those active names, right, you got to really pick and choose the spots you're looking to play at and play off the sweeps on. Okay. I'm not saying like the action yesterday it wasn't worth playing, but $5 million worth of weeklies in Tesla, for me, I'd be looking for a move right now. Right? If not, that next morning, I'm looking to get out. Beyond that, I don't see much edge in any of that flow. Because look, tomorrow we could see a ton of put sweeps in Tesla, and it would be totally normal. So what happens to all that call buying we saw yesterday? Does that get washed out? Do you ignore it? All right? What do you do with that? You understand what I'm getting at? Right, so if you're day trading Tesla, and Tesla is, I'll give you a perfect example where sweeper activity has an edge for Tesla. Okay, if you trade the name, let's say here, okay, Tesla is selling off, okay, or even chopping around, going sideways. You see those $5 million in weekly and bi-weekly sweeps come in. Okay, you like to set up for a day trade. You're relying on that activity to provide some momentum, change the momentum in the name right now for intraday purposes. That you can make an argument you have an edge. Okay. What Tesla might do next week off that action, I don't see, not the way Tesla trades now. Not the way Tesla trades now. I mean, the action in Tesla is absurd. Absurd. It's the most absurd out of all of them. Yeah, just a day trade, just a scalp. Especially let's say Tesla's at a certain level, kind of like the way Ranchero looks at the sweeps. But you got to understand, you're not trading, or you're not relying on the sweeper activity off trades like that. You're using the sweeper activity as a potential catalyst with something else you're looking at. So you're relying on something else. See, the problem for me is that I couldn't, the way for if I traded that way, I don't have confidence I'd find consistency that way for me. Because there's Tesla sweeps continuously, right? I'm not a big levels guy. What would determine me playing Tesla at that particular time on that? It's, it'd be rare occasion. Like I'm at my best when I'm sitting at the desk, not looking for anything in particular, and something slaps me upside the head for intraday. Again, Marvel today, right? And sometimes you'll get that in a Tesla, right? We've seen that where they're at some event or somebody says something and they just bomb it and you ride that momentum. We've seen it in AMD plenty of times. But you just got to understand there are a lot of hands in the cookie jar right now in these names. You know, and this is, this is exactly like you think of it. Okay, this is exactly, and this has been going on a while, but when stocks get crowded, this is what you expect to happen. This is what needs to happen. People looking for breakdowns, people looking for breakouts, right? Because even it's not only just bullish. There's just so many eyeballs. People are trying to catch shorts, just as many, I think. And look where the stock is, right? Like net, right? If you chased into this extension, the stock literally is in the same exact spot after a whole menagerie here. The Wild D stats, honestly, like that's where I think for this market to be healthy, I agree with you, Wild D's 100%. I think that value side of the trade is got to be what gets attention. I agree. I really do. Right. And I think to your point, I think a lot of underbelly stuff, even, you got even small cap industrial, mid cap industrial, stuff like that, that has been ignored, completely ignored in the market for a long time. That once buyers sniff that out, you know, once those things start to get attention, you'll see there's more than you actually may think out there. And to your point, Wild East, if the economy does hold up, a lot of that stuff has been priced for recession, right? So it's definitely undervalued if you're not going to get that deterioration in the economy. So that's, again, going back to the earlier point, I think a lot has to do with how things shake out here, and I really don't know. But the industrials have had a nice move of recent too, right? I mean, some names really got kicked into gear. I'm trying to think what other. Let me see. Any other names in particular? Listen. I'm like any of you guys. Tech and growth. I love when that's the place to be. There's nothing better. There's nothing better. But I like it when nobody else is in it. That's when it's best. When nobody wants the semis, that's when the opportunity is huge. Case in point, the start of 2023. Later on, have a good night, brother. Case in point, that was the start of 2023. The semis, everybody puked them up. Nobody wanted semis when the economy's going into a recession. Remember, recession was a lock. Everybody was pricing things for a recession. The semis, nobody wanted any piece of it. I think to Wild Deece's point, you have, like, let's say even the semis now, you have names like this that didn't participate in a rally. Okay? Like TER, I don't know if you guys know, this is like a real deal chip stock and a blue chip name. Like, this is a legit name. Okay? You go back, been a lot of money made in this stock. Look at this. And after a move like this, right, you get this, no matter what it is, you get this lengthy consolidation. And I think to Wild Deece's point, these stocks really haven't done anything. They haven't done a thing. Right? Profitable names, 674 million for the quarter. These are real names. Another one like this. You guys know these names. Texas Instruments. All right, same thing. Look at this. So to your point, well, these I think, well, if any pullbacks, I think these are the ones that um the money's going to look to buy a lot sooner because again they didn't participate in the upside at all. You know, what's this guy doing? This was another one. You guys probably don't even remember this stock. This thing was a beast. It's tied to more towards the auto industry, right? Maybe that's the. Oh, this has been moving a little bit of late. IONQ is speculative growth, but they're in a, what is it, quantum whatever? They're in a hot sector. Again, if you catch, there was some flow there today. I would call it nibbling. We've seen some heavy action in it, right? That was this rip here. If you saw some action in it and you like this name, the spot's not bad at all, but this is more speculative growth, right? Like, let me see. I'm guessing. Oh, man. Wait a second. I removed all my indicators again. I hate my life. How do I get the indicators back? I just reset it like this without saving it. How do I do that every time? I do that at least once a day. Control Z. That's it. Control Z. Oh, I got them back. I just hit reset. Thank you anyway. But this IONQ, I think they're not making any money, are they? I don't think so. No. So you're gonna need liquidity help, in my opinion. You're gonna need help on the liquidity side. Oh yeah, I can't get this fucking circle off. There we go. You know what I mean, Tobias? You're gonna need help on the liquidity side. Otherwise, you know, I just think it gets stuck. It gets stuck. So I would definitely pay attention to liquidity, and you know you'll see like Bitcoin will be moving. The Bitcoin miners. I mean you saw how hot they got recently. Like if you overlay not even Fed reserves, but if you overlay I don't know what the fuck, how many Bitcoins are there? If you overlay this to Bitcoin, the correlation is ridiculous. Right? Sometimes Bitcoin, I guess, is front runs it. The weekly, you can see it better here. Look at that. Come on. That's ridiculous. You see that? All right. So here's off of COVID. Okay. Again, we say the Fed threw in the kitchen sink. There's the Bitcoin move. Whoop. All right. Then 2021, that's when liquidity starting, right? Getting sucked out. Look at Bitcoin. Okay. Then SIVB went under and you had that facility to bail out the banks. All right. Got Bitcoin moving a little bit. Look at this. And then here recently, that's scary correlation, no? So you probably just have to pay attention to Bitcoin if you want a measure of liquidity, and if these things can, I guess the way I would say is if they can find follow through, you know, otherwise they sell pops. That's what happens. They sell rips. So you don't want to get stuck in it. This is if you go on TradingView here, right? Where you do like you pair symbols. And I think if you just type in Federal Reserve balance, like balance sheet or whatever, you'll see it. WRB, WFRBL. But there are several. You could go even on indicators and pull up any liquidity. There's a million of them. See? That's down there. Some of these are central banks as a whole, not just the Fed. This is just the Fed. But that's that blue line I overlaid it with. Again, I'm not sharing something with you guys that nobody else knows. Everybody knows the gasoline for Bitcoin is liquidity, as with most speculative assets. Sharpies. Let me pull up Sharpies. Sharpies aren't bearish. I won't say they're bearish. Hold on. I'll tell you what makes me a little bit nervous the last couple of weeks is not Sharpies, it's the riffraff specs, Khalid, that make me a little nervous. Hold on, I'll show you. All right. So Sharpies, what they've done is added a little exposure over the last couple of weeks. Nothing huge, but again, they're not hedged. So I guess you take that as not a bearish sign. So here are Sharpies. But this is what makes me a little bit nervous. Not nervous, but they probably need to get shaken out. And who knows? Maybe this little weakness shook them out already. We'll see tomorrow. Ooh. I don't have a steady hand for these screenshots. So this is, as we say, the riffraff specs, the small specs in the futures market. And you can see they jumped in the pool here. Right? Now, again, you can see right here, they got shaken out and they came back. You don't want to see that linger, because then the market could catch them. Likes to catch them. I caught them here, caught them leaning here, and of course into the highs here, right? Yeah, I don't like to see that. Yeah, I don't like to see that. But again, that right now, we'll see tomorrow if maybe they got shaken out already. Certainly possible. Right, so here's what I'm talking about liquidity, guys. Back on the liquidity point with what we're looking at. All right. I mean, look. That's liquidity-driven rally right there. No doubt about it. Like, this was off SIVB, okay, and got things lit. And I think what added to the excitement there as well was that was it. The Fed tightening, right, draining liquidity out of the system was over with. When they bailed out the banks, they showed their cards. But not a lot of people thought something like this was going to happen, because there was no reason for this to happen. Now, again, I say no reason. Maybe Yellen saw something in the bond market that spooked her. You understand? But for us, what we're looking at, what's the reasoning behind this? Right? The economy's been resilient. People, they're bragging about it. They were bragging about financial conditions tightening for them so they don't have to raise rates. Like, what? Why would this happen? And that's where people are just extrapolating that into Biden is in trouble and we got to help him out a little bit. Right? And again, that's not Powell per se. That's Yellen, who's picked by Biden. But other than that, there was nothing that we found out an excuse for this. So, and that all stemmed from that QRA. This is all, Yellen and then Powell, double whammy. Yeah, and some people are calling this right. McElliott's calling it, what do you call it? QE twist, or some people are calling it QE light. A couple of guys I know are calling it QS, quantitative support. But yeah, no doubt about it. Waldis, you get another influx of liquidity here, kind of to Waldis's point, right? Where they're easing again. Things, you talk about blow off top, things can get really, really crazy. Really, really crazy. Why would they want that is beyond me, right? Like what's the excuse for it? And that's why I think things would get really, really crazy, because you would get almost people concerned about a hyperinflation type event. You get the dollar sell off hard. People would want to just own stuff, equities, Bitcoin, assets. Yeah. Well, and again, they'll never admit that, but that's what the conclusion everyone's going to come to. That's the conclusion everyone's going to come to. They already are. All right? They already are. If you get an event and then you take action like that, it's a different story, right? They can blame that event and they had to do this. But, that's why a lot of people were paying attention to the Fed minutes, right? Did they see something? Were they talking about something? Did Powell see something for him to pivot like that? Because it was surprising. Literally 2 weeks before the Fed meeting, Powell was bragging about financial conditions doing the tightening for him. Everybody thought they were going to raise rates, remember? And then 2 weeks later, you're discussing cutting rates? What the fuck? Where'd that happen? Yeah, on top of the pivot already from Yellen, which I showed you guys here, that nailed the bottom. Powell came after that. Here's the Yellen bottom right here. Powell came over here, which was even more surprising by Powell because things already turned and were getting really bullish at that point when Powell pivoted. There was no reason for him to do what he did. Yeah. So, I mean, that jokes is, man. This time's different. It's all the same shit. I've been through too many cycles, If you remember when SIVB went under, they're not going to bail out the banks. Yeah, right. Okay. After they've seen Lehman go under, they'll never let anything like that happen ever again. It's if the risk for the Fed themselves, I think, is the opposite, where they lose control. Okay? Kind of to like what Waldis was saying, if there was some sort of easing here and things just went parabolic and then blew up, they would lose control. That, I think, is the risk. But, you get a credit event or you get something in the bank, anything like that, they just, they're going to implement QE and that's it. Case closed. Yeah, right now, I mean, we're at the point now where you have no more short covering. The systematic funds did their work, But again, we're at the point now where we have a breather, okay? So that's everything that we discussed. We were making the point that there's likely going to be some sort of digestion for us to then reevaluate. We're in the midst of that digestion now, okay? So now we just want to see how things transpire out of this. Okay. Again, to some of your points, where does the rotation go into? Where are the new setups? All right. So right now we're starting to see things that got too hot breathe. In my opinion, some of the hotter stuff didn't breathe enough. I mean, they were really extended, you know? So the money's going to need to find other things. And little by little, we're seeing signs of that, right? Big pharma, it's defensive, but we're seeing signs of it. So that's what I think we want to keep an eye on from this point, right? When, to McElliott's point, I think earlier, and I'll end it on this, that's where I think we'd start to get more on the cautious side instead of looking towards these sell-offs as opportunities. If you get, like, for example, you get a little breather here, and then we come gangbusters right back, right? You get megacap tech leading the way, crowding there. That's what's likely going to lead to something a lot more violent come whatever it is, February, March. And it's certainly possible. But let's see, let's see how this shakes out. What we would want to see, ideally, what we would want to see, okay, for it to be healthy, is for this digestive phase to continue. The longer, the better. Okay. So the markets, the indexes, we kind of don't even want to pay too much attention to, right? There'll be opportunities for trades, those quick trades, but we don't want the indexes to heat up. We want them to at the least stick in some sort of range or consolidation, and underneath the hood, names are outperforming. All right, so that would be ideal. That would be ideal. And the God honest truth, the longer that goes on for, the more constructive, the more bullish it would be, in my opinion. Yeah, that's what worries me, Wildese. If we get what you're saying, if we get tacking on more gains, right? We don't get that digestive phase, and we just continue this bullish phase we've been in. To your point, right? End of January, February. I mean, you're going to have positioning really full. You're going to have VIX, right? Already it's a disaster. You're going to have put sellers, put sellers all over the place. You're going to have a lot of all sides positioning to light on fire. And that could lead to something a lot more violent. I think it could lead to something kind of like that Volmageddon shit that we saw back in the day. 18, remember we were talking about that? Where is that? Hold on. Here, right? Right? So kind of we were at that point here where, you needed this to go, you needed it to go into some digestive phase here, right? Just no more upside, because more upside would breed more bulls, more sloppy buying, more all sides positioning. And then you get to this point here, any little trigger, any catalyst, and you get this violent selling here. Whoop. And this is what happens. You feel you got FOMO and you feel like you're missing the move, okay? And what happens, people end up chasing. And even if you chase, you feel like you've made money, right? Let's say you're chasing here now, the market continues higher, and then this comes up and whoop, wipes it all out. All of it, the whole move, the whole extension. Yeah, and exactly, Max. Like, a lot of us wouldn't mind seeing something like that anyway. If you're not caught in it, that's an opportunity, right? You're going to get to a point where everybody pukes up. They scare the shit out of them. And then you don't have to rack your brain like I'm doing right now. Oh, what do you buy? What do you this? You buy anything that catches flow off of this, right? It becomes a lot easier. So to Max's point, that would be fun, and you don't mind it if you're not caught. But the trick is not to get caught, and a lot of you are aware of it, and that's a good thing. You know, you don't. And Pink Panther is one of those things you don't want to get caught chasing. It's musical chairs, right? What were we calling this? The same thing, musical chairs. Musical chairs. This extension. Okay? The music's playing. You keep looking for a chair. You keep looking for a chair until you don't find one anymore. So what are you going to do? You're going to start buying new swing positions up here, and then they pull the rug on you? That's the musical chairs analogy. It's no good. Right, to Max's point, you rather a reset and then take it from there. You want to see the reset. So again, we'll cross that bridge when we come to it. You know, right now, to your point, everybody's pretty much on the same page. Try to remain nimble. Okay, the less extended a setup, right? Names that haven't extended as much, or on pullbacks or in consolidation. You see some decent flow in them. You want to take a shot? That's fine. Just be careful chasing the extended names and getting caught too heavy-handed. Just make sure you have protection. Just make sure you have protection. And even if the markets do go quiet here, if we continue to see buying under the hood, rotation names, again, that aren't extended, you can play those things. You can play those things. It's the stuff that's already crowded. That's where you got to be careful chasing green there. What time is jobs? 8:30 sharp. So 8:30, you got the job number. Should be market moving, you would think. Maybe we'll get some selling off the job number and we could play a bounce tomorrow. But again, my mentality right now, because of how long in the tooth the move has been, you know, whenever they come in and are attacking that day, I want to get in the middle of it. You know, as long as we're seeing flow, I'll take that trade. I don't mind it. I don't mind it one bit. I love that risk reward. You know, the problem is when they're not attacking and you're sitting there twiddling your thumbs, like you saw a good 2 weeks me doing. So, yeah, be careful with the FOMO. That FOMO gets you in trouble. And the problem with the FOMO is you feel like you made the right move for a day, days, weeks. But as soon as you get caught, especially in options, you get caught with, like, think about it, right? If you're chasing, and think about what some people were doing with these mega cap names. Not only were they chasing, they owned all these names. They bought and sold them at lower levels, right? Apple, like they bought and sold Apple at lower levels, and just because it's continuing higher, oh, breakout, right? That's what you started to hear, the B word, breakout. They think that they can buy it here, and it continues, right? I mean, fine. You put on one trade like that in options, they go to zero. Yeah, it's not going to destroy you. It's a loser, whatever. You buy a basket of this, and this happens. You know, it's a nice hickey. It's a nice little hickey. Exactly. Use your DraftKings account for that, right, Max? Or go to the casino. You don't need to do that. But options, you know, we're all degenerates. We get drawn to the action. Anyway, guys, I'm out of saliva. Happy New Year. Happy and healthy to everybody out there. I appreciate you guys stopping by every Thursday. And all the Steamroom members, I love you guys. I'll see you guys mañana. And I'll see the rest of you on the morning broadcast. Anyway, Happy New Year, guys. Enjoy the rest of the night. I'll see you mañana.